Up next, let's talk grain and livestock markets. Joining the show this week was Kyle Bumsted. Here's our conversation from Thursday morning.
Let's start on the grain front. As we look at the trade so far this week, you and I visiting here on Thursday morning, kind of tough splitting. In particular, when we look at the corn and soybean market, kind of explain what's happening that's leading to the prices we're seeing on the futures.
Yeah, that's a very good question. What we've seen here recently, we have seen a few export sales in the morning, so I know a lot of people are talking about that. So that is something here. We got down to some levels here potentially where we are starting to uncover a little bit of demand, maybe a few buyers. Not that I'm overly optimistic for a huge rally in grains because the weather forecast just really isn't conducive to a rally right now. The weather forecast is actually pretty conducive to crop growth, and it looks kind of bearish moving out through the next 6 to 10 days, maybe even 11 to 15 days. So, however, Wednesday evening, did notice something here in the corn complex. As you said, we're doing this Thursday morning, so it's going to be interesting to see how we close out the week. But we did see big volume in the corn complex. And by big volume, I mean we traded over 50,000 contracts in the September and the December contracts. And that's typically markets where you're trading 10 to maybe 12,000 on a busy night, and you trade over 50,000. So it looks to me like there might have been a little bit of commercial business being done behind the scenes here. Maybe potentially some positioning ahead of the WASDE report coming out here on Friday, which I'm not a firm believer in the government reports, but there could have been a little bit of positioning for that. On the soybean side of things, that's the technical picture still looks weak on that market. We are very oversold in the bean complex, but yet both corn and beans, they seem to keep building a little bit more carry into the market as we move forward here. And that's telling me the commercials are comfortable with the size of the crop we have coming on, even with the issues we have out there, whether it was a flooding in Iowa, the massive hailstorms we've had seen move through south central Nebraska here, and some of the issues we've seen out in the eastern corn belt. The commercials just aren't really buying into it, and the funds really aren't looking at it either. They're looking at the weather forecast saying, yep, it's hot, but there's rain. They've had moisture, so we're good to go. And that's what I think is going to keep the foot on the neck, so to speak, here, unless we get some massive, uncovering demand, which I don't see that yet, or we get a bullish weather picture, which doesn't look to be the case here for the next few weeks. It could be tough go here for this corn market. However, and the bean market as well. However, we are getting to some areas here in this corn complex where we're getting down to crop insurance levels here. If you take that spring price times your 80 or 85%, whatever you had, you're getting down to your synthetic put options. So a lot of times, not necessarily all the time, but a lot of times you see a quote unquote crop insurance rally happen towards the fall, and shucks, we just don't get a crop insurance payment, even though we've dropped down to those levels because we just beat that percentage price. So in the back of my mind, we could see something like that. Seasonally, this market does tend to work lower until about the third week of August when that national cash corn does put in its low about that time of year. So we could be setting that earlier this year. We'll have to wait and see. But for now, it looks like this corn market is trying to find some footing, but we need to get some good confirmation here on a weekly close.
Kyle, you brought up those government reports. I quickly debate the accuracy of the latest one that came out, but something that made the headlines was looking at 3 billion bushels of corn sitting in the countryside in the farmers' bins, about 5 billion bushels USDA estimating in total with commercial storage factored in there. I guess you look at those numbers, and I guess the fact of the matter is it seems like there's a lot of corn in particular out across the countryside. We're moving closer and closer, not quite harvest time yet, but what's that tell you about how the farmer feels about these prices? Obviously not happy with them.
Yeah, obviously they're not happy with it. They're not moving it. I don't know if there's really that much corn out there. The basis does reflect it in some areas, and I know there's been a lot of chatter about basis out west, but this is the time of year where we move corn from east to west anyway out to the feed yard country. So I'm not too amped up on that, but yeah, it's being held right now because guys don't like the price. However, with another potentially sizable harvest coming on here, barring any massive weather issues here in the next 4 to 6 weeks, that corn's going to have to come to town. So you're going to see the second harvest. You're going to see the tin can harvest happen where they empty the bins out, it goes to town, and everything tends to work lower. Now, seasonally, you do see some seasonals happen here where there's pressure on the September contract moving forward here. Some of those seasonals started here where you're bear spreading the September and buying some of the deferred issues out there. So looking at that right now, as we get through the end of the week here, we have the July grains. They cease trading here on Friday. So that might potentially help bounce this market. But with the amount of old corn that's still out there and a potentially sizable harvest coming on here, I don't know if September or even December has a 40-cent rally in it yet. If you get a 20-cent rally, it might be the rally to start selling there.
Okay, let's talk livestock, cattle in particular, Kyle, with another minute or so here left. Both live and feeder cattle, looking at the charts, seeing a drop here over the past week or so. What's going on there?
Oh, that's a very good question. Now, on Wednesday, there were some chatter about some more bird flu headlines out there a little bit. Box beef market did take a step back here earlier this week. It did come off in chunks. However, there was a plant issue that really didn't make the headlines, and I don't really know all the pertinence on that. But there was a plant issue that potentially forced a lot of box beef into the market here, so they kind of had to have a, no pun intended, fire sale, I guess, on the box there to try to push some of that out and make some room so they can make repairs. But it still looks like we're killing cattle. 620,000 is still the estimate here this week, and I do think there's that possibility we could make that yet. With this heat coming here and the basis as strong as it is, I think guys are going to move some cattle here. The way it looks, we did see a lot of cash cattle trade here on 312. I did hear some 314s here early this morning here on Thursday, but those are kind of a select deal. A lot of cattle in South trade 187 to 188 in Kansas and Texas. So if we start to see them buckle at that, it might be a little bit tough here. I think the Packers are still wanting to try to strong arm this thing, and they're holding the checkbook, and I think they're going to be tough to play ball here with in the coming weeks.